Hi all, welcome to this discussion. So in this discussion, we are going to discuss about the external uses of financial statements. In the previous session, we already discussed about the internal uses, where the uses within the company, but the external uses are the uses where they are outside of the organizations. So when it's compared to internal users, external users have access only into the published financial statement. So they don't have access to the company's internal reports. They will depend only on the published financial statement to make various assessment and evaluation. The external users are stakeholders outside the organization who rely on the financial statement to evaluate financial performance and stability. So these are the stakeholders outside the organization who rely on the financial statement to evaluate the performance, stability, liquidity, and various other metrics. So in this lesson, we are going to identify major external users who are the key external users of the financial statement. Then second things, explain what each user analysis. For different users, they are interested in the various things in the financial statements. So each users what aspect they are looking into the financial statement, or what each user analyze in the financial statement. Then we are going to understand how financial statements support investment and lending decision making process. So these are the key learning objectives for this lesson. So before starting, we have to understand who are the key external users. The first user is the investor. They want to make a decision whether to continue this investment or discontinue this investment, or what is the profitability I can expect from this investment. So they want to see mainly the return and their investment potential. Then the creditors. Creditors mean whether they want to lend into this company or not. They are normally assessing the liquidity and overall financial performance of the company to see this is a financial stable company, and to see whether they want to lend or not. Then for the suppliers, they are very interested in the company's financial record to see whether to provide a credit to this company, or what is the risk level of this company by providing the credit. Then for the government, it is for the tax assessment. For the government and regulatory bodies, they are interested into collecting tax. So they are looking into how much company generated as a profit during a particular period of time to collect their tax. Then the customers. In the point of a customer, some customers need a long-term supply contract with some suppliers. So to provide that such contracts, such support, the supplier definitely there should be financially stable, and the performance wise it will be good. So the customers, they are looking into the long-term supply stability and how they can support their business by providing continuous uninterrupted supply. So these are the key external uses of the financial records or financial statements. So now we will move into each user's details. So for the investors, in the point of an investor, they want to generate the profits. They want to evaluate the profitability, dividend potential, how much dividend they can expect from this business, and the growth prospects, how they can expect, how much growth they can expect for their investments. So these are the key metrics the investors are interested to evaluate. So the key things they are going to measure, the first thing is earnings, how much the company's earnings, and return on equity, profit margin. So these are the some key metrics where the investors are very interested to evaluate. It is mainly related to the profitability and overall company stability to see how much profit they can expect how much profit they can expect in the future, and how much overall return that they can expect from their investment or from their investment made. So this is about the investors. Then the creditors. Creditors normally looking into the repayment ability. If I give some credit to some of my customer, they are definitely looking into the repayment ability and its liquidity positions. So normally creditors will evaluate the current ratio. Current ratio means the purpose is to evaluate the liquidity. Then the debt ratio. Then how financially risk this company. Then the interest coverage ratio is measure the ability to pay the interest. So the creditors will mainly evaluate the liquidity, financial risk, and the coverage. That means ability to pay interest on the time. So these are the key metrics normally creditors they are going to measure. Supply is almost similar to the creditors. They are also providing extending credit to the company to buy the material. So they also normally focus into these metrics only: the liquidity, financial risk, and ability to pay the credit on the time, or ability to repay the credit on the time. So these are the some key metrics where suppliers were interested to evaluate. Then when it's come to the government need to assess the taxation, regulatory compliance, and economic analysis. Government want to evaluate the taxation, how much tax they can expect from the business, and they want to compare the company's tax return with their financial statement to see is there any discrepancies. Then about the regulatory compliances, they are following the exact regulations which are related to each different government bodies. And the economic analysis, how the overall economy is performing. So these all things will revealed by the company's financial statements. Then the customers. Customers normally they want a stable supply without interruption, or they want a supply for a long-term reliable supply. So if the supplier is long-term reliable, to be long-term reliable, the supplier should be financially stable. Then only they can sustain their business for the long term. So the customers may analyze the supplier financial statement to ensure long-term reliability. So let's look into this case. A bank review a company's balance sheet. The total asset is 10 million, liability is 8 million. In this case, the debt is 80%. That means out of 10 million asset, 80% of assets are financed by the debt. So in this case, the bank may consider it's a high risk loan due to high financial leverage. So these are the some cases where how the bank is using to evaluate a company's financial statement. So the suppliers may interested into another areas. The investors are looking into mainly the profitabilities. The creditors mainly looking into liquidity and overall financial securities. So when it's come to each users, they differently look into different aspects of the financial analysis. So to do all this analysis to all these external users, they are depending on the published financial statements. Which external users is primarily concerned about loan repayment ability. So loan repayment ability, the major concern is with the creditors. So let's move into today practice question, multiple choice questions. Which external users is most interested in a company's ability to pay interest? Employees, creditors, customers, and managers. So definitely it is creditors. Creditors are mainly interested to see a company's payment ability to in this interest to extend the credit to that customer. In this case, employees are the internal users actually, and the customers they are looking into the overall liquidity position of the company and overall financial position, and the managers are mainly managers are normally considered as the internal users of the financial statement. So just a quick summary of this discussion. So just to understand who are the external users of the financial statement: the investors, creditors, suppliers, government, and the customers. So these are the key external users of the financial statements. So each users will evaluate financial statement for different economic reasons. Investors are looking into their return. Creditors are looking into the short-term solvency or liquidity and financial positions. Suppliers are also looking into their liquidity and the overall repayment ability. Government is looking into the profit to see the tax action, and customers are looking into the overall financial position to ensure their long-term supplies. So each users evaluate financial statement for different economic decision-making process. So this is about today's discussion. If you have any doubt or you need any clarification on any of these topics, please ask me on the comment section. Thank you for watching this video.